Boom shakalaka, today's video, we're going to take a look at, is the Bitcoin bull run of 2021 over? Is the majority wrong? Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're going to be taking a look at, is the bull run of 2021 over? There's a lot of speculation going on right now, particularly based on this chart here and also this chart here, that we could have seen the tops in 2021. So today's video, we're going to take a look at, is the bull run over? Is the majority wrong? And are we headed towards lower lows? Before we get into it, guys, make sure to like, subscribe, click the notification bell. Also, come join us over on Twitter at @TheCryptoLove, where every week we give away one of these sweet shirts. Now, right now, it is a very fearful time in the market. Extreme fear. And as a matter of fact, if we take a look at it over time, we can see here that the fear is pretty much as low as it was back here, also as low as it was during COVID, and pretty much anytime it's under the 200-day moving average, the fear and greed runs to extreme fear. But it's not only in Bitcoin and cryptocurrencies that people are fearful, because as a matter of fact, the S&P 500 crashing as we speak. This was predicted a few weeks ago, where we have this rising wedge here. We have decreasing volatility. Likely price will break down. Now, as this is breaking down here, cryptocurrency also dropping significantly. So that being said, are we at the end of this cycle, or do we have much more to go? Before we get started, I should just preface this whole video by saying, number one, I'm not an expert and this isn't financial advice, duh. But also, I can't predict the future. Guys, I don't know what's going to happen better than anybody else. And anybody who tells you they know what's going to happen, guess what? They're lying to you. But another thing that's very, very important to understand is that our thoughts and actions influence the market. The prices, they move based on our thoughts and then the actions we take based on those thoughts. Even though we'd like to think that the market is rational and there's something that actually drives it, most of the time, we have an impact on it as well. So what we think about it is going to affect it. And if we become fearful, guess what? Prices go down. If we become very greedy, prices tend to go up. And thirdly, we're not going to know anyways until afterwards. So let's just have some fun. Let's explore. Let's try and figure out. Because what I've actually done is I've taken the probability of certain things happen. We're going to take a look at a few popular charts, including this one here, and this one here, and see how likely they are to predict the future. So how are we doing this? Well, we are actually using something called Laplace smoothing. Now you can find out about this, you can read about the sunrise problem on your own, but Laplace smoothing basically gives us an estimate of how likely something is to happen in the future based on how often it happened in the past. So we're going to take a look at the golden ratio, the pi cycle top, and cbbi.info to see how well they can predict the top. So first, let's begin with the Bitcoin golden ratio, because I think this is one that all of us have been looking at since it basically came out about 600 days ago. We've relied upon this as being the most accurate predictor. And basically what it says is that 51% of the bull run happens before the halving, 49% happens after the halving, and it's repeated itself twice. It's going to repeat itself again, and September 27th of 2021, in 5 days, it's going to be the top of the market. Now, I think we can all agree that this one is just wrong, this bull run. It's just wrong. Because here's the thing. Either the top was $65,000, and in that case, it's wrong already, or we're going to have a new all-time high in 5 days, which is unlikely because Bitcoin would need to go up 10% every day for the next 5 days while we're suffering this extreme fear. Both scenarios, pretty unlikely, so we can just kind of rule out this chart as being true. But that being said, how likely is it that this one could predict the top? Well, so far it's been right 2 times. Based on Laplace smoothing, it would be right 3 out of 4 times. So 75% chance of being correct. But also you have to look at this in the inverse. There's also a 25% chance that is incorrect. And it's looking like this bull run, it is incorrect. Now, on to the next chart, one of my favorite charts, the pi cycle top indicator. This has called a top, not the all-time high top, but a local top 4 out of 4 times within 3 days of the top. Pretty darn accurate. Now, if we take a look at this, based on that, there would be a 5 in 6 chance that it would call the top, 83% chance that it would call the top. Now, the most recent top that it did call back here in April, we don't know yet if that was a local top or if that was an all-time high top, because it turns out that of all-time high tops, only 2 out of 4 so far were called by the pi cycle top indicator, meaning that the all-time highs would be roughly between 50 and 66% chance of calling that. And again, you should also look at the inverse. Even with as accurate 4 out of 4 times, there's still a 17% chance that it will not call a local top. And there's also up to a 50% chance it won't call an all-time high top. So, that being said, I think there is some stuff that we can glean from the pi cycle top indicator. And right now we are at very, very important areas, because right now it's above the 111-day moving average, this orange line right here. Now, in the bull run of 2017, once it went below there, it pretty much stayed under that 111-day. However, in 2013, it dipped below and then went back above and never went back below until the top. So as you can see here, we'll just zoom in on this. We are right now at the 111-day moving average. If it breaks below there and stays below there, things could potentially look bad. But another thing to notice is that the trajectory of this 111-day moving average changed right here. And historically, when it has changed towards an upwards direction, generally, we see a new all-time high after that. But we'll have to see, because nothing's perfect. Now, let's go on to another great indicator. CBBI.info, the Colin Talks Crypto Bitcoin Bull Run Index. Confidence we're at the peak right now, 54%, not very high. Now, this one's great because it looks at a whole bunch of different indicators. I think there are 11 in total right here. Now, right now, the golden ratio flagging 100. But if we take a look at the Bitcoin search term on Google, only 13%. So there's a wide discrepancy between what some of these indicators would suggest. And if we take a look at the chart right now, it's definitely not as high as it could be. So that being said, if we take a look at the probability of this predicting the end, well, 2 out of 2 times. We'll take a look at this again. 2 peaks, back here in 2017 and back here in 2013. It predicted with 100% accuracy the peak. So if we take a look at that, well, there would be a 75% chance they could predict this peak. However, also a 25% chance that it would not predict the peak. Now, what can we see happening? Well, right now it's at 54% or 56%. Not very high. So we could be kind of on the way down, or we could potentially also be kind of on the way up. And there's really no way to know the future. But we do have a few things that we can look at to kind of get an idea of where we're going. So the first thing is Bitcoin performance since market top. This is on checkonchain.com. And if we take a look, each bull cycle from Epoch 1, which was in 2011 to 2013, or 2, 2013 to 2017, or 2017 to 2021, each one gets a little bit longer. You can see this first one, very sharp trajectory. The second one, a little bit longer. Third one in orange, even longer than that. So we would think that the fourth one now would be even longer than that, giving us more time. And as a matter of fact, one thing that they did on the Colin Talks Crypto Bitcoin Bull Run Index was they took away the stock to flow model and replaced it with this halving to peak days, which would suggest that March 29th of 2022 would be the next peak, not the September of this one, not September 27th as in this one right here. But also, continuing on, we would expect that it might be a little bit longer than previously. Potentially, we could almost draw a line, which would bring us somewhere out here towards the number of days it would be. But further than that, we also have to consider where we are in the market cycle. Now, this is a difficult one because, at least the way I see it, we could be in a couple spots. Like right now where we are, it somewhat reminds me of what was happening in the beginning of 2018. We got to this complacency part. We had the peak, price came down, we hit, and we thought we were going back up, but maybe not. And they're like, oh, we'll just need to cool down before we're going back up. Sounds a lot like what people are saying right now. And that could potentially be where we're headed before we go down and down and down and down and down before a bear market. But potentially we might not even have hit the real peak yet, because if we take a look at this chart, on checkonchain.com. We can see with the Bitcoin unrealized profit and loss, the actual realized price of Bitcoin, but also the market cycle part that we are in. And right now, we are in optimism anxiety, not really in belief or denial or even euphoria greed right now. Now, we reached that before, but right now we're kind of in that belief anxiety. Fortunately, we're not in hope and fear or capitulation right now. And I think it should be noted right here that the Bitcoin realized price right now is around $21,000. So we're still very high above that. We're still pretty much double that right now. And potentially the price could come down. There's another pricing model that uses the illiquid supply floor to give us an idea of what could be the bottom price. And this is $39,000. So we are hovering literally right at this line, which combines Glassnode's illiquid supply data with the stock to flow model to kind of see a floor where we should be. And this is from William Clemente over on Twitter. So that being said, is the majority wrong? I don't necessarily think so. I think that the people who think that the bull run could be over have good reasons. Because, hey, according to this chart here, yeah, the bull run should be over. But I think either way right now, this chart is wrong because we're not going to have a peak here on September 27th. It's just not going to happen. The other thing to consider is that, every time we have a pi cycle top and a full top where it actually flags like right here, every time we have one of those tops, guess what happens? There's a drawdown of about 83%. It happened here, it happened here, it happened here, but guess what? We only had about a 50% drawdown this time. So there is a potential that we could be heading lower. So I can definitely see the reasoning in people thinking that the bull run is over. And it could very well be over. Like I said, I can't predict the future. I don't have the answers. But I think a very important thing to consider is to know your investment time frame. What this is saying down here. You need to know your time frame. Because if your time frame is you need to be a millionaire this year, sorry, I don't know what to tell you. But if you have a 10-year time frame, I would say you're pretty good. Now, if you don't believe me, I do think you should go and watch this video here with Tonevase and Willy Woo. This was published last week. Was this flash crash or short-term blip or a big problem? Or this was actually 2 weeks ago, something like that. But it gives you, there's something new going on with the market that has not happened ever before in Bitcoin. Things have changed. Since about 2020, things have completely changed. And I think Willy Woo does a great job here of describing exactly what's going on. So I would highly recommend watching that video, and I'll put a link to it right up above there. But also, let's take a look at some important things to consider when you realize that having a time frame of longer than a year or longer than 4 years is a very, very important investment time frame. So, first, despite what's happening with the price, whales think coins are cheap right now. They are buying up coins right now. As we can see, this green line is the whales buying coins. There's a peak there, a peak here, a peak here, a peak here, and a peak here. And you can see all of these areas. Whales buying up coins before the price rockets upwards. So if you want to be rich, you should do what rich people do. And rich people right now are eating up Bitcoin. Because while others are fearful, and we've shown you that everyone is fearful right now, whales, smart money, is greedy. Not only that, but William Clemente says on every short-term drawdown, people say he's a permeable because of his multi-month thesis is bullish. He follows the data. Everything can be verified. He's not into the wishy-washy BS. If we don't have much higher prices by December, January, he's 100% wrong. And I would even go so far to say by March, by that time period picked out by the halving to peak days on cbbi.info. If we don't have anything by then yes, we can say all of us permeables are wrong. But not only that, we have great macro investors like Raoul Paul saying, enjoy the ride. This is what you get in an 80 volume asset class with exponential returns. Buy the fucking dip works in the end, but you can't time everything to perfection. He added last week and will add when he gets more cash in. Good night and good luck. So yeah, he's still buying. And not only that, but probably the ultra Bitcoin permeable Michael Saylor says, in the long run, it won't matter if the price of Bitcoin was 0.01 or 0.03 or $0.05 million when you bought it. And that is the outlook that I think we should all have when we're talking about timing of investments, because this is going to be I don't know, could be $1 million plus for a Bitcoin. Very well could be. So it's not going to matter if you bought it at $10,000 or $30,000 or $50,000 or $40,000 or whatever, because this is changing the face of money as we know it. The biggest financial revolution the world has ever seen is happening right now. And while we get caught up in these teeny little fluctuations in the price, we're going to miss out on the big picture. And I think we all know that the big picture is headed up. So guys, that's all for today's video. If you did enjoy it, make sure to like, subscribe, click the notification bell, and I'll catch you later. Peace.